I'm really very pleased to welcome you to this very important workshop. A workshop where we gather to discuss the findings of the Bank of Uganda consultation on the potential issuance of the Central Bank Digital Currency. So we see this workshop as representing a very critical step in our ongoing efforts to explore how emerging financial technologies can support Uganda's economic development and enhance the efficiency of our payment systems. The BOU initiated this consultation to assess the readiness, the implications, and the potential benefits of introducing a CBDC. As of May 2024, there were about 134 countries, representing over 98% of the global GDP, which are either exploring or piloting CBDCs. 7 economies, including Nigeria, Jamaica, and China, have already launched their own digital currencies. These developments reflect a broader trend towards digitalization in the financial sector, driven by technological advances and a changing consumer preferences. Your feedback and insights will be invaluable in shaping the Bank of Uganda's future stance on CBDCs.
The impact on the financial sector, the promotion of financial inclusion, efficiency and cost reductions, improving financial discipline and transparency, and enhancing monetary policy implementation. The benefits and motivations for CBDCs from the respondents are reduced currency costs, fostering innovations in the payment systems, and enhancing cross-border payments.
One of the bottlenecks of CBDCs is the ability to do cross-border trade. And so you need a bridge for that. You need some sort of bridge infrastructure. And we've seen a lot of subscribers on the M-Bridge, which is one of the most popular, across Asia. And we have countries such as the UAE plugged in as well. So we'll see a lot of that kind of collaboration to try and sort of dissociate.
One of the major challenges I think we'll have as a country, and probably as a central bank, is to work with other players in the sector. This cannot be a central bank monopolized process. Can the central bank get all these people involved in this process together?
There are going to be distributors and holders, and depending on what the design of the retail CBDC is going to be, they will also provide store of value. But is it going to create a two-tiered system? Is that a real risk? And that's one of my fears. Like, what does that two-tiered system look like?
To creating bridges across different markets to allow cross-border trade, I think is one of the things that I see as a key bottleneck.
There should be a lot of training, definitely. Enforcement is extremely important because that's also one of the things that actually lacks. There's no country in the world that has 100% satisfied with all the laws they have. So it definitely can never happen. I would say that I'm very comfortable that definitely we are good to go.
I actually believe CBDCs can be impactful. I truly believe wholesale CBDCs will start paving the way. It will teach us a lot of things that we don't know.
The Bank of Uganda to come out with some tokens to be given out to the public for free. That's how they are going to bring this public on board.
The CBDCs could be approached through a use case rather than a separate currency. Because in my understanding is that the CBDC should come out as a form of currency and not a currency, a separate currency on its own.
We do know and fully understand that innovation cannot be a central bank-led mandate. We must work with you, the practitioners. We must work with the private sector, and indeed, that's the direction we are taking.
8:44. Good morning, everyone. Once again, my name is Rita Karungi Butime. I am your MC for today, steering a discussion on the consultation paper that the Bank of Uganda sent out on possibility of a Central Bank Digital Currency for Uganda. The bank sent out a questionnaire last year, and we received feedback from the market, and today we are here to validate this feedback that we received. In the interest of time, allow me to invite our Executive Director from the Payment Systems, Dr. Twine Manzi, to give us his remarks this morning. Thank you.
So, good morning, everyone. Apologies, I think we've started a bit late, and I guess the others will join us when they finally can. I think my role here really is rather simple. We, like Rita has said, we sent out a survey, you gave us your comments. We want to have a discussion just to make sure we have clarity and understanding of what your thoughts were on the idea of introducing CBDCs in Uganda. Right now, all I will ask is, I would like to take the opportunity, one, to ask the governor, Dr. Michael Atingiego, to come here and give us his remarks, and then we get straight into the conversation, because the survey was quite extensive, and we just want to make sure that all of us have the same understanding on this concept. Thank you. Dr. Michael.
Thank you, Titi, and very good morning to all of you. And I'm really very pleased to welcome you to this very important workshop. A workshop where we gather to discuss, like Titi has mentioned, the findings of the Bank of Uganda consultation on the potential issuance of the Central Bank Digital Currency. So we see this workshop as representing a very critical step in our ongoing efforts to explore how emerging financial technologies can support Uganda's economic development and enhance the efficiency of our payment systems. Now, the BOU initiated this consultation to assess the readiness, the implications, and the potential benefits of introducing a CBDC. Like you'll hear, the findings of this survey is based on about 151 responses from various stakeholders. And it did provide us with some very valuable insights into the opportunities and the challenges associated with this innovation. So, like Titi has mentioned, today we are going to provide these findings, not as something, as a definitive conclusion, but as a starting point for deeper consideration and further feedback from all the stakeholders. And if you look at today, around the world, that's globally, the financial landscape is undergoing a significant transformation. As of May 2024, there were about 134 countries, representing over 98% of the global GDP, which are either exploring or piloting CBDCs. 7 economies, including Nigeria, Jamaica, and China, have already launched their own digital currencies. These developments reflect a broader trend towards digitalization in the financial sector, driven by technological advances and a changing consumer preferences. Of course, in Uganda, we're witnessing significant shift toward digital payments, with mobile money emerging as a cornerstone of our financial ecosystem. The numbers in terms of the customers, in terms of the accounts related to mobile money, reflects a widespread adoption nationwide. The value of the transactions are far much greater than the the GDP of the country. The value of the transactions is about 253 trillion shillings in 23-24, compared to a GDP of about 190 trillion, which is really highlighting the increasing reliance on the digital payment solution. Now, of course, this growth has contributed to a rise in access of the formal financial services, with about 65% of the adult population now having access to the banking services, up from 58% in 2022. These developments do demonstrate a transformative potential of digital financial systems in enhancing financial inclusion and driving economic activity. Now, just mention briefly that the Bank of Uganda has played a role in promoting efficient payment systems. If you look at what's happened to real-time gross settlements, we've seen a significant increase in that. Electronic fund transfers have also increased. The regional integration systems, for example, the COMESA regional payment system and also the East African payment systems have also increased, including international transactions. For example, commercial banks process an estimated 53 trillion shillings in outward transactions via SWIFT, while remittances inflows reached about $914 million in 2024. Now, of course, beyond this, the Bank of Uganda has implemented strategic initiatives to foster innovation through the regulatory sandbox. It has expanded on financial literacy programs to enhance digital literacy. It has also begun ongoing study on blockchain technology to explore its integration into the financial sector. So we see these achievements as collectively positioning Uganda as a key player in the payment system, innovation across the region, while creating a more inclusive, innovative, and a globally connected ecosystem. So, the consultation on CBDCs is a natural extension of these efforts. The survey findings reveal a range of perspectives on the potential benefits and risks of the CBDC. And it's of course important to note that this approach shows a balanced findings in terms of the perspectives regarding CBDC. CBDC is not a magic bullet. It has its own risks. Its introduction would require a careful consideration of legal, regulatory, and technological frameworks needed to ensure it is safe and efficient. It will also require a thorough assessment of the potential impact on the existing financial ecosystem, including mobile money, commercial banks, and other payment systems providers. So, on the path forward, as we move forward, the Bank of Uganda will remain committed to a phased, cautious, risk-based approach to the development of the CBDC. This approach will be guided by the principle that any decision to issue a CBDC must be based on a thorough understanding of its potential benefits and risks, as well as the readiness of the Uganda financial ecosystem to support it. So we see today's workshop as an opportunity for us to engage in a constructive dialogue on these issues. Your feedback and insights will be invaluable in shaping the Bank of Uganda's future stance on CBDCs. With the survey results in mind, we encourage you to consider some questions such as, what are the potential benefits and risks of the CBDC in the context of Uganda? How can a CBDC complement existing payment systems such as mobile money and retail and card payments? What measures should be taken to mitigate the risks associated with the CBDC, particularly in terms of cybersecurity, financial stability, and privacy? How can we ensure that the CBDC, if introduced, is inclusive and accessible to all Ugandans, including those in the rural and the underserved areas? So in conclusion, introducing a CBDC is a complex and a multifaceted issue that requires thoughtful consideration and collaboration among all concerned stakeholders. The BOE is committed to fostering an open and inclusive dialogue on this topic, and we look forward to your contributions to this important discussion. So I urge you to use this workshop as an opportunity to explore the the potential of a CBDC in an objective manner, focusing on how these CBDCs can support Uganda's broader goals of financial inclusion, economic growth, and payment system efficiency. I want to thank you for your very kind attention, and I wish you a productive and insightful deliberation. God bless.
Thank you, Governor. Let's join the rest of the participants online to welcome them to this workshop. The Governor has highlighted that the Bank of Uganda is committed to the global efforts in digitizing payment systems, and we are trying to position ourselves to the globally connected economy. And this will require aspects of regulatory frameworks and also understanding what the market is really saying in terms of this innovation. Without further ado, allow me to invite Mr. Peter Kagumya to dive deep into the findings from the survey that we shared with the public. And this will give us deeper insights on where we are and what your thoughts are towards Central Bank Digital Currency for Uganda. Thank you.
Good morning, ladies and gentlemen, and all those online. Good morning to you as well. This is the report for the consultative work that the National Payments Department conducted last year in June. This is our presentation. I think I'll start right away. So a brief definition of a CBDC is that it's literally virtual money issued by the central bank. It's unlike the cryptocurrencies or stable coins. This is backed by the central bank. And I think that is a message we are going to say all the time. To give you perspective, this slide shows you how those with CBDCs in circulation are progressing, and all of this is post-COVID. So we have the first graph, the first point there is for Bahamas, and then Nigeria, and then the last one is for China. As you can see, the selling point for the Bahamas was more about reducing currency. They're an island nation, so transporting currency across the islands is quite difficult. So a CBDC was very good for them. Nigeria, the main issue was fraud. They need to, there's a lot of fraud in there, so they just need to have something that is a bit more useful. China is a growing economy, and they are the biggest right now in CBDCs. And if you have a global outlook for it, like the governor had earlier said, we have 134 countries that are exploring the CBDC. These are some of the interesting facts. You have 105 jurisdictions preferring retail, while 23 are exploring wholesale. All the G20 countries are in exploration mode. But what's important is that the BRICS are also there. All the original BRICS countries are doing so. Intermediation model seems to be the preference for most of the exploration projects that are happening. We have, to a lesser extent, some CBDC models that are doing cross-border, and I think the biggest project is the M-Bridge, which is connecting China, Thailand, the UAE, and together. And like I said earlier, the digital one is really the most extensive with 17 regions, and their perspective is in education, healthcare, and the tourism sector. And it's still a project. They've not yet completely launched it. So recognizing these global efforts, the bank decided to carry on the CBDC consultation in Uganda. And we did collect data from stakeholders only. And it was a semi-structured questionnaire through a link. And we did have 151 respondents we targeted 250, so that's about 60% response rate. We had responses from the central banks of Kenya, Armenia, Egypt, Sri Lanka, and Tanzania. And the response, the sectors that responded were the financial sector, including the fintechs in Uganda, the business community, which were mainly the consultants, legal firms, accounting firms, and then the academia. And the good thing is that before we did the survey, 90% of the respondents actually read the consultative paper, and they frequently ask questions about CBDCs. So we go to the findings, and we find, unfortunately, 45% of the respondents find that the infrastructure in Uganda is inadequate, and this speaks volumes to the lack of a national switch. I'll be blunt about that, okay? Let's just be blunt about certain things. At least the stakeholders know that, so that is something we need to do. The benefits and motivations for CBDCs from the respondents are, those are the three highly rated ones: reduced currency costs, fostering innovations in the payment systems, and enhancing cross-border payments. And in this regard, the last particular point, the cross-border payments, is because the ESC is promoting the IPS systems, and I think this whole integration in the ESC is one of the reasons that we need to address the cross-border processes. The impact on the financial sector, those are the foremost important reasons that were stated by the members, the stakeholders: the promotion of financial inclusion, efficiency and cost reductions, improving financial discipline and transparency, and enhancing monetary policy implementation. There are challenges, and we can see that foremost was cyber risk. Then there's operational risks, which speaks to downtime of systems that we have, and financial stability in the economy. This is what the respondents alluded to. The impact is assumed to be positive from most of the stakeholders, you see at 88%. And the big consideration, 60% of the respondents alluded to the fact that we should be mindful of what the countries around us are doing before we make the decision to issue a CBDC. We should basically be on board, everybody. Get on board with everyone around the area. The preconditions for the issuance of a CBDC in Uganda, the topmost were a supportive ecosystem, legal frameworks must be in place, that is amending the laws here and there, appropriate technology. This speaks a lot to blockchain technology, which the governor had just alluded to, and ensuring that there's a lot of stakeholder engagement for making sure that the CBDC, people are aware about its advantages and use cases. Then we get into the design principles of the CDC for which were alluded to by the stakeholders. Innovation and efficiency principles are highly rated, coexistence, and do no harm. This simply means that if we introduce a CBDC, can it coexist with the current structure that we have, these payment systems in the country? Does it harm anyone? I hope yes, I've seen there are many commercial bank members here, so no harm to commercial banks if we transfer, this and that. So we will definitely take note of this, particularly that third one, do no harm to anyone in the business. The fintechs, we want to promote fintechs and what they are doing, so we make sure that whatever we introduce does no harm to the business models available. And then we have the features that are most desired for the CBDC would be instant transactions, which again are clearly relate to a national switch, something of that kind, so that everybody, mobile payments, bank payments, everything can be instant, and convenience of use, high transaction volume processing, scalability, like we have said, so that we can take this all to every corner of the country, and convertibility, which is a must, and conformity with international standard, and low cost to end users. You can see all of these above 80%, and that's the preference for the features that the CBDC should have. Programmable CBDCs, yes, I think you can see 65% indicated that we should be issuing one. And is it retail or wholesale? And again, we can see that retail is the most desired, which is retail allows individual payments, not wholesale is for bank-to-bank kind of issues, institutional issues. But retail would be individuals would participate in the use of the CBDCs. Quantities, in the programmable abilities of the CBDC, do you institute limits, quantity limits? Say you cannot have mobile money more than 7 million. Here they disagree with limits. They want business, particularly the business people who are more inclined to having whatever amount of money they can have on their CBDCs. And then account-based or token-based CBDCs, and this was a bit of a divided opinion, and I think the more we have engagement with stakeholders, we will get to know what is best, but that is what it is. But a token-based is one which has less centralized control from the central bank. Yeah, so you just have a token, you can use it, it's private to you, and the other one, the account-based, all the information is known by the central bank. Yeah, all your NIN is known everywhere you stay because you have a CBDC. Yeah, your village, name it, and then and the token-based is like normal token. You just have your money in your pocket. Is it interest-bearing or not? That's another issue that we were talking about. Does the central bank have to give interest on someone who is saving a CBDC amount? Or shouldn't we do it? That is one of the key elements. That would be a cost center to the central bank or not. The way commercial banks give interest on your savings on a fixed deposit or not, this is kind of the same issue, but this would be the central bank giving interest or not. And you can see, again, that's to me a divided opinion, 42% and 39% having interest or not. So generally, they trust that a CBDC is good for the economy, and that's a high level of trust at 84%. The preference of using a CBDC over banknotes, this is something central to most central banks, reducing currency costs, and again, it's very likely that the consultation with the stakeholders, most of them say that it's very likely that they would use a CBDC rather than cash or coins. And then the usage of a CBDC, if they would, based on these results, is that it's most likely to be used in Uganda at 78.1%. The use cases that we developed from the outcome of the survey are that business-to-business payments, and payments of goods and services, P2P. The general cases of mobile money, the mobile money architecture is clearly in this, and except that this also includes cross-border payments. So, as I conclude the findings, the opportunities for the CBDC adoption in Uganda are for financial inclusion. It would help in the financial inclusion metrics. It reduces transactional costs and monetary efficiency, monetary policy efficiency, and financial transparency for most of the individuals in the country. There are challenges to all of this, and the infrastructure, like I alluded to earlier, keeps coming up, and I think that is something we will have to continue to discuss. And cybersecurity risks, fraud, and all those elements in there, and privacy concerns. Many people have said, you have a CBDC, what I talked to about earlier, token-based or account-based. Are people comfortable knowing all their details? Who has all the money, who has, things like that? And then the impact on banks, that is the transmission. Will these CBDCs be intermediated through banks or direct to the individuals? That is another concern that is greatly, that will be a great challenge for us as a country. So our conclusion for this report is that a phased approach is recommended for the CBCD adoption. This report we will finalize, and after all discussions have been made, we'll finalize this report and we will share. We'll have to have a comprehensive feasibility study examining other countries in the region and those which have started. Then we'll have more consultations with stakeholders, and then we have a pilot program. That is generally what the respondents alluded to. I thank you all for listening.
Thank you, Peter, for that comprehensive report from the study, highly summarized. It's interesting to know that 88.1% of the respondents believe that the CBDC will have a positive impact on our market. Of course, looking at financial inclusion as the big driver to adopting the CBDC, reduction of transaction costs, and also monetary policy efficiency. Now, I would like to call upon our panel discussion to deep dive into each of these questions that were shared with the public. And I would like to invite Ms. Jackie Chitiwa from the financial sector, Deepening Uganda, to come and take charge of the panel discussion. We thank our online participants. We have over 137 participants online, and we'll be waiting to hear from you and your thoughts as we go on with the discussion. Jackie, the floor is yours.
Good morning, everyone, and welcome to this very important panel discussion that continues to explore potential implementation of CBDC for Uganda. We know that, and I think the Deputy Governor has also spoken about this, and the presentation before, that many central banks are exploring digital currencies, and today's discussion actually provides a great opportunity for us to engage with industry stakeholders on the possibilities, the challenges, and implications of introducing a CBDC. So this is a critical step. We've been informed that these are early discussions, and a lot more consultation is needed before the central bank makes a definite move. So we want to see a CBDC that is designed in a way that aligns with our needs. We know that there are some deployments that have not been successful, and hopefully we can learn from some of the lessons or mistakes that have been done in other jurisdictions. So we've also learned from our previous presentation that CBDC, though, has a potential to transform payments, enhance financial inclusion, and support the modernization of monetary systems. Its implementation is rather complex. And there are many questions around infrastructure, security, policy considerations, and the role that we each have to play as the public or private sector. So by bringing together all the key representatives in this room and those online, we hope that we can design a currency that will meet the needs of Uganda. So our distinguished panel today consists of experts from the financial sector, from the fintech world, from the legal world, and media. And each of them brings a unique perspective on how a CBDC should be designed and integrated into the existing financial landscape. We will explore critical topics around interoperability with current payment systems, the potential impact on commercial banks, regulatory considerations, privacy and security, and how we can balance innovation and financial stability. Hopefully, these insights will help us better understand the opportunities and risks that are associated with CBDC implementation. We also want to assure you that this will later become an open discussion that will encourage interaction from the audience as well as those online. So you can keep your questions, and we hopefully will have time to delve deeper into those. So without taking up too much time, I just want to introduce my panel. And I'll start with Mr. Paul Busharizi. Mr. Paul Busharizi is a veteran Ugandan journalist and media consultant with over 3 decades of experience in journalism, corporate communications, and media. He has served as a Reuters correspondent between 1998 and 2004, covering Uganda's economic recovery, privatization, and liberalization. He returned to New Vision in 2004, rising to business editor, contributing editor, and public editor. And as public editor, he upheld journalistic standards, managed commentary sections, organized discussion panels, and led annual New Vision CEO Budgets Lunch. He has international media training and consulting, and has worked with the Commonwealth Secretariat Media Consultant. So basically, he is here to share insights on how the public might receive or might perceive of a CBDC, and how best the central bank can communicate the benefits of the CBDC or the challenges that they envisage. So please join me in welcoming Mr. Paul Busharizi. I'm also very happy to introduce my former boss, Ms. Rashmi Pillai. Most of us in the room know her very well. She's a global executive leader with over 19 years of experience in impact investing, digital financial services, and financial markets development, policy and regulation across Africa and South Asia. She's currently the senior financial sector specialist for the CGAP at the World Bank, focusing on innovations in inclusive finance against climate effects in rural agricultural value chains. She was previously the head of public policy for Wave Mobile Money across multiple African markets, and prior to that was the CEO of Financial Sector Deepening Uganda. Her extensive experience in this area makes her particularly suited to contribute to discussions on CBDCs, given their potential impact on financial inclusion, market development, and regulatory frameworks. She also serves on the boards of the Fintech Association of Uganda and FSDU, further demonstrating her commitment to the evolution of the financial sector landscape in Uganda. Please join me in welcoming Rashmi. I also have the pleasure of introducing Alice Namuli Blazevich. She's a partner and head of technology and innovations at Katende Sempewa and Company Advocates. She's an award-winning lawyer, innovator, international speaker, author, and thought leader in the legal tech sector. She's also ranked by Chambers Global as a leading tech lawyer. She has over 20 years' experience in legal practice, specializes in technology and the law with a keen interest in artificial intelligence, blockchain, cryptocurrencies, fintech, cyber law, and data protection. She represents some of the largest fintechs on the continent and blockchain technology-based businesses which are reshaping the mode of doing business in Uganda. She serves as a board member or non-executive director for various Pan-African fintechs. She's a cybersecurity expert for the Security Institute of Governance and Leadership in Africa at the University of Stellenbosch. Please join me in welcoming Alice. And last but not least, I'll introduce Reginald Tumusimwe, who is the president of the Blockchain Association of Uganda and CEO and founder of Capital Savvy an investment and advisory management firm. With over 12 years of experience in the banking sector, Mr. Tumsime's leadership in blockchain space and his insights into the potential benefits and limitations of different technological approaches and the broader blockchain ecosystem in Uganda is quite critical for this conversation. You're welcome, Mr. Tumsime. Thank you very much, our panelists, for accepting the invitation to come and share your knowledge and expertise. And to start us off, I think I'll start with asking about the people's voice, and this question goes to Paul. In your view, what do you think, if you could just break down this whole concept of CBDC to an ordinary Ugandan, what is your view on that?
So, I think, first of all, the ordinary Ugandan doesn't really care about the technicalities. He just hopes it works. So that would be a good place to start. It's on. Sorry. Okay, maybe I need to move. Yeah. So as I was saying, the ordinary citizen just wants the thing to work, so that would be a good start. But basically, I think they understand, I think given the way digital currency or the use of mobile money and such like instruments have pervaded the economy, they better understand what the possibilities are with the central bank digital currency. I was particularly impressed in the study that shows that 83.4% of respondents are confident in a possible CBDC in the future. Confidence in a currency, of course, we know is many times confidence in the central bank that underwrites or backs this currency. So, from a people point of view, I think our understanding is better because of the use of electronic money in the last few years, and we are confident that the central bank probably has what it takes to ensure a viable CBDC.
Thank you very much, and I think we will dive deep first into what we see as benefits of having Bank of Uganda issue a CBDC. And I think my next question will go to Rashmi. From your perspective, do you think the introduction of CBDC could enhance financial inclusion or any other macroeconomic benefits in your view?
Thank you, Jackie. And I just want to also take an opportunity to say hello to all the audience members and say that the Bank of Uganda consultation paper was a brilliantly written paper. Just want to congratulate the entire team. It was very thoughtful, and it's very hard to write an extremely complex paper that is concise but deep enough. So congratulations to the team. Peter, I think in your presentation of the optimism, maybe I'm one of those outliers that was not that optimistic. So clearly I was not with the majority, so I apologize with the majority. I was having this debate with the governor, and he's with the majority, so I think he has convinced me to an extent. So I will make a distinction between wholesale CBDCs and retail CBDCs, and I think that there is enough, like I've read enough papers from the Bank of England to the South African Reserve Bank to Bank of Uganda, and that it's very clear that wholesale CBDCs can exist independent of retail CBDCs. And there is enough arguments and potential strength of pilots that tell us that yes, it increases efficiency, interbank efficiency, cross-border payments, securities, etc. It's definitely worth it. It will happen. It's just a matter of time. How do you transition to it? What does that look like? Now, when you say, okay, let's talk about retail CBDCs, how does that, work in terms of financial inclusion? What is the, because when you ask a question like that, you're asking, how do we operationalize it? Like, how do you, at the risk of, having Paul's wrath when he said people don't care. Well, maybe they will care when the central bank starts marketing it, and the banks and mobile money providers are like, okay, how do I explain to my customer that what the central bank is marketing versus what my e-money is the fiat currency, they have no difference, it's still backed by the central bank. It becomes extremely confusing, right? Like, it becomes very difficult to even operationalize something like that. So I'll take a step back and say that I am not against CBDCs, but I do think retail CBDCs are more intricate in their design, and it is very contextual on the country that you're dependent on. In the consultation paper, and I think when Peter was presenting the methodology, et cetera, there were 3 graphs, one from the Bahamas, one from China, and one from Naira. The e-Naira has seen a dip. Like, its activity rate, it has seen a single-digit activity rate in the past 1 year. So I'm, with respect to the Bank of Nigeria, going to discount that. The only one that we have has reached a certain size where you're like, this is not a pilot. You can now actively study whether retail CBDCs are having effect on financial intermediaries like banks, wallet providers, is China, right? And in their design of retail CBDCs, so when you talk about retail CBDCs, the fundamental question that I had is, how is there not going to be deposit competition? How is this not going to impact banks and their asset lending, like their lending base, right? And one thing in the design of China CBDC is like, it is not interest bearing. Big difference. Because I wouldn't put my money in any of the commercial banks if they had no interest on deposits. So they didn't want that competition to happen, so it was not non-interest bearing. But it is still competing because the distribution model is through WeChat wallet, it is through TikTok wallet, and the fiat one pricing of transactions is different from the e-renminbi. So it still doesn't seem like the same financial instrument, even though we want it to be. So is it going to impact financial inclusion? Theoretically, but I'd still go for a national switch, respectfully.
Thank you very much for those insights. I'm sure we're going to have so many questions around that. I'll then invite Alice. We are now talking about, I think Rashmi has talked about the structure and infrastructure issues. I now want to ask about the regulatory framework. How important and how challenging, and in our context, what do you think we have to have in place to have a robust regulatory framework that actually supports CBDC implementation?
If you asked me, I think the best answer I would give is that I think we have most of the regulations actually for us, to go forward. We always want more. I try to share this, that we don't need actually more laws to come up, or rather to start, either a project or to push an industry forward. I feel right now we have more than enough laws in the cybersecurity space. We have enough regulation in data protection. We have one of the best laws actually in Africa, East Africa, and actually also when you benchmark it all over the world, most of our laws, rather, we've benchmarked them on global laws that have very strict interpretation. So I'm very confident that where we are at now, we have all the sufficient laws, basically, to support the CBDC project.
How would we be able to strike a balance?
No, that's a very important question, because it poses quite a number of challenges. But first of all, it's really important to understand that, yes, we need a regulatory framework, but at the same time, the regulators need, to comply within that framework. Like I mentioned, we already have the regulations. One of them, which I can definitely share of, is our Data Protection Act, which takes care of all the privacy concerns that any individual or company or corporate company would have. And if we, if all these, and if focusing on the data protection, it covers the basic human rights, privacy human rights for all individuals, and that's usually where everything starts from. So if all that is taken care of within, as it's already taken care of in our data protection regulations, I feel it would be easy for the regulators to find a balance when it comes to implementation. The other issue would be about, rather the other importance would be prevention of financial crime. Peter, when he was giving a report, he mentioned that one of the biggest challenges is cyber crime. And of course, the whole project would poses so many vulnerabilities because everything definitely would be online. But again, the fact that we have a good regulations that within the cybersecurity industry or space, I feel that there's already some kind of balance. All the regulator needs to do is pretty much refer to these kind of regulations. And then the other importance would be the balance rather would create a kind of a trust in the system. If you don't have a trustworthy system, then of course, like what he mentioned, the public will distrust the system. They will not want actually to engage, because any kind of fraud that is uncontrolled, any kind of crime, just imagine losing your money on a daily basis, or reporting a financial crime and nothing pretty much is kind of done. The public will withdraw their trust, and I don't think the central bank would want that kind of situation where the public does not trust the system. So creating that balance definitely is extremely important. And lastly is the global compliance. As of course a government and the central bank, we are part of a global system, right? We don't operate in some kind of vacuum. So we need collaborators. We need cross-border transactions. We need to work with jurisdictions across the border. We need to work with the World Banks or other global banks. So global compliance would be extremely important. So finding the balance between the right, our laws, our privacy laws and compliance, it would be extremely important when in considering the global world we are in. The challenges would be, of course, implementation when it comes to, for example, collecting the right data versus privacy. Someone mentioned, just imagine the feel of your information, all your information being out there, and everyone can be able to access it. So how do you counter that? I think the best thing would be, as a regulator, to figure out what would be the most important information to obtain from the data subjects, that would be the public, and then make sure that it's used in the rightful manner, and also discarded after its use. There, of course, definitely you're going to increase the trust in the public. I would also think one of the complications that would definitely, one of the challenges you would experience would be under KYC, trying as much as possible to get as much information, because mainstream banks, I think, have set up, or financial institutions already have like a system on how to comply with KYC. Now, in this kind of space, what kind of KYC would it be too intrusive into our privacy, individual lives? So all those, some of the things should be. I feel like they would kind of pose a challenge in terms of, do I really have to give all this much information? Am I safe? Is it safe? What is going to happen to it? But of course, when you carry out it could be countered with a lot of public awareness campaigns. When people know, they actually, they know and they're aware and they feel like they trust you, then they would also comply and give you the data. And lastly, it would be the challenge rather is this whole space we are talking about has no jurisdiction. So what does that mean? That in case of a crime in Uganda, anyone can access your data from any other country because everything is online. It could be from Nigeria, hacker could come from Nigeria, could come from Kenya, which becomes a little bit difficult when it comes to enforcement of our laws and regulations. So those are some of the challenges I could think about.
Thank you very much. I think a key question is about readiness, and I think that's one of the things that the report highlighted. And this question goes to Reginald. You're from the tech world, and you know that Uganda suffers significant infrastructure limitations, including poor power supply, internet connectivity, bandwidth. We also have issues on cost and affordability. So how do you think we are we ready to have a CBDC deployment with such issues still prevalent in Uganda?
Thank you. Good question. I think one of the things that gives private practitioners like us hope is the central bank. Very innovative and yet maintains the traditional nature of a typical central bank. We've seen that in their phased approach to the whole CBDC discussion, and yet the openness to have these discussions is a good thing. And so we've seen a lot of progress with financial inclusion. People like FSD have done a good job. We've seen telcos through mobile money penetration also improve the ecosystem as well. And I always like to say that the issuance of mobile money is typically privately issued money. And so the concept of a CBDC in courts already exists with mobile money in a way. The difference is the other money is privately issued and backed obviously one-to-one with money in a trust account. And so to the extent that we leverage the traction through the growth of mobile money usage, whether it's through the existing infrastructure, so interoperability with existing mobile money operators. You have our electricity access also improving, projects such as the World Bank Scale-Up project under the Ministry of Energy. I think that's also very critical. We have other interesting concepts such as providing low-cost wallets. So again, private sector participation becomes interesting, and to the extent that we leverage other existing sandboxes such as that of the National Payment Systems Act to encourage private sector to innovate and to cross-collaborate with the central bank to reach people also becomes very interesting to look at. How do we also leverage renewable energy? So how is there a possibility of using solar, for instance, as a source of energy? Solar-powered phones, solar-powered homes, how do we increase that as well? So I think these are the key things that will continue to be important for us to reach people on the grassroots. Yeah.
Thank you. You've given an example of renewable energy. I think that's relevant consideration. What about cost and affordability?
So the issue of cost is, first of all, the advantages that accrue to the use of CBDCs or decentralized currencies, as we know them, such as stablecoins, and I'll touch on that later, is the issue of cost. And that's really for the central bank to look into the kind of infrastructure that underpins the CBDCs that we hope to roll out across the country. And obviously, it's a very delicate balance. If you want to work very well with existing mobile money operators, they profit from transaction fees. And so how do you then create an environment that doesn't necessarily cannibalize on existing operators in this space? It's a very delicate one, but I think As more adoption increases across the country, I think naturally the competitive nature of the economics is that the costs will go down. So I think key thing is the kind of infrastructure that underpins the development of these CBDCs, but also to the extent that we, leverage other campaigns and take advantage of internet rollouts and USSDs, for instance. How do we, again, use technologies such as USSD to allow those who don't have access to internet to take advantage of this payment infrastructure? So all these initiatives, as we scale, the economics around it will bring the cost down. I think anyone looking to approach this from a cost perspective would inadvertently, again, cannibalize on already existing private sector players. So to the extent that you sort of provide an enabling environment for people to compete, I think will bring the cost down over time. Yeah.
Thank you. Thank you very much. Paul, I also want to ask you a question overall readiness. Beyond just the infrastructure, how do you think Uganda is ready to adopt a CBDC? And what challenges do you foresee that would prevent a successful launch?
Of course, again, I'm talking from the perspective of a man on the street. I think beyond the challenges of infrastructure, one of the major challenges I think we'll have as a country and probably as a central bank is to work with other players in the sector. This cannot be a central bank monopolized process. So, for example, infrastructure, talk about telecommunications, as you're saying, the working with the telecom sector, the working with even attracting investment into the sector. How is the central bank integrated into all these processes? The challenge many times for us in Uganda is that we operate in silos. Our government has been known to operate in silos. So you have, just a basic example, you have, we need infrastructure for road and rail, but when you're doing acquisitions for land, you do acquisitions for land, rail, in Nakawa, and then you do land for the road in Nakasero, and then you do the other one for broadband in Rubaga. There's in countries where governments are much more not working in silos. Those are integrated, and I think that's going to be a major challenge. Can the central bank get all these people involved in this process together? Also, not necessarily, almost relatedly, is if this is going to be a central, not that if, it is a central bank driven thing, and central bank, by association is a government entity, we need to reduce the suspicion of private players. He said it earlier, if you go in and you cannibalize the existing players. My experience over the years in reporting on business is that the government has a suspicion or is suspicious of the profit motive, for example. Why do you want so much money? Or, why is the money so expensive? Why don't you do it for free? It's kind of doesn't work like that. I think a better understanding of how the private sector works has to be factored into this. And I think on the part, and I think I agree with Rashmi that it looks a bit tricky doing it retail. I would be more comfortable, of course, if it's wholesale at that level. The point is that if you can't then bring all these players who will be involved in this process together in a way that is mutually beneficial to everyone, then it will be difficult to get the trust of the eventual users, who probably will be our man on the street. So in terms of readiness beyond infrastructure and the things you've talked about, of course, cyber security is important and all that kind of business. Question is, can these government institutions, first of all, work together as themselves, and then work with the potential investors in this section who would most probably, and ideally in my perspective, be from the private sector.
Thank you very much, and I think I'll come back to you on the aspect of collaboration. Over to you, Rashmi. I know with your reservations, but what do you think the financial sector institutions, the non-regulators, commercial banks, PSPs, EMIs, what role do you think they would play in a CBDC deployment, if any?
I think we all have a trip to China in our future. But this is, this is a seemingly simple question, but incredibly complex. Because I think that we need, and Bank of Uganda is doing absolutely the right thing. They're calling people like us and talking to a larger audience. Unpacking the complexities is what the Bank of Uganda is doing, and that's so important. So will the central bank, intermediaries like wallet providers, which are, as Reginald said, e-money issuers in particular, and commercial banks play a role? Yes, they will play a role. The Bank of Uganda or central banks are not trying to replace them. So they're going to be distributors and holders, and depending on what the design of the retail CBDC is going to be, they will also provide store of value. But is it going to create a two-tiered system? Is that a real risk? And that's one of my fears. Like, what does that two-tiered system look like? Right? You don't go from 0 to 100, like 100% CBDC, though suddenly we're all, there is going to be that. So if we say, all right, let's say, I think Peter in his presentation had examples of countries that said we will limit the percentage of CBDCs because there's enough papers written that say that there is a real risk. Like, I think it was the Fed Reserve that said that if you had 10% CBDC adoption rate, there's actually it reduces bank financial intermediation, which is a risk to the smaller banks, right? So then when you say, yes, will central banks need these intermediaries? Yes. But what does that mean? Does it mean that the cost of loans are, because they are now fighting with another financial instrument, is the cost of loans going to be higher because you're trying to be more attractive with your fiat instrument? That's one question. If it means that, let's say the BOU says, Rashmi, you can hold up to 1 million shillings in CBDC. Let's say they limit the amount that I can hold. And I have it in my, say, hypothetically, MTN wallet. But then I'm like, nowadays I'm hearing rumors of MTN in South Africa. Is the group really as stable as they seem? And I see MTN is risky. And I've moved everything to a CBDC at a stroke of a USSD channel. What does that really mean? What are we talking about here? Now, even if MTN did not have a risk, I've created a risk instantly, right? But just by a rumor, which has no basis. So, so I don't know. Maybe the associations will be more positive than I am. Oh, okay. Please.
Anyone else you wanted to come in, Paul?
Just following on the argument that she said MTN to CBDC, it could be the other way around, from CBDC to MTN, which is a risk that needs to be factored into going forward.
Great. We've had skepticism, global skepticism from some of the world leaders. I think recently President Trump signed an executive order banning the creation of CBDC. Do we see this as having any impact on our efforts here locally? I'll ask Alice and maybe Reginald to attempt that.
He did ban, actually. Yes, there was an executive order, but at the same time, he went ahead to appoint a committee to, create a CBD. So I don't know if that is still a concern, but you're asking what impact it will have, like, to Uganda or to the rest of the world. I genuinely feel, if you ask my honest opinion, I think right now the US has too many problems that I don't think by the time they are done, the world definitely done taking care of their internal issues, the world would have moved on. And of course, as a country, we'll be most probably either looking east or looking somewhere else for, I don't know, some kind of guidance or light. But so what does that mean? Meaning the impact of what President Trump says on Uganda, specifically, I find it might be very minimal. But in a real world, if everything, I guess, remains as maybe was before he came into power, I feel that it would slow down so many countries which have already, engaged in CBDCs, because if you understand the kind of relationship, like for example, Europe has with the US, they would want to know, they would want also to be conscious, why is the US, backtracking? Yet, they would rather slow down, waiting to first understand why the US has slowed down. So definitely that will also affect us, slowing down. Then, of course, then it will also increase focus on private digital currencies, because if CBDCs are taking a backseat, then of course the private sector will increase. Then influences on other countries, I struggle with that right now. I think because everyone is kind of looking for alternatives in terms of, okay, in the US things are kind of messed up, where do we go? So I don't think there might be that much influence if we just focus on pretty much internally and maybe rather on the continent. I feel there'll be less impact.
I have a different view. I think Trump, I recall 3 years ago when we hosted the governor now to a private dinner at the association, I shared a book, a memento to him by Ray Dalio called The Changing World Order. And I look at Trump as the pin to that bubble. I think his presidency will accelerate us into a real changing world order. So yes, I think the ban is real, actually. It's real. And the view is very simple, that we want to focus on privacy of our citizens. And I think a lot of Trump's campaign has been around bringing power back to the people. So the fact that you've banned CBDCs, you're inadvertently saying, look, I want to promote decentralized currencies such as stablecoins. I would love you to know how, what's happening with your own money, take your own decisions. I don't want to be seen to be controlling you. And on the other hand, in 2021, you had the deputy chief at the Central Bank in China very excited about CBDCs solely because of the authoritarian nature of the government and the fact that it would provide them an avenue to have some sort of surveillance over transactions. And one of the things he mentioned is the ability to even leverage artificial intelligence to monitor transactions on-chain for CBDCs. And so you had Trump with a contrasting view. So I think what are the key implications of this? I think one, accelerated growth across the EU digital currency as well as that of the yuan in China, because a lot of these economies are looking to dissociate from the central nature of the USD in nature and the payment trails that the US controls. So we'll see a lot more accelerated, wholesale CBDCs and perhaps retail from countries in Asia. We've already seen a lot of excitement around the bridge, between different Asian countries, because one of the bottlenecks of CBDCs is the ability to do cross-border trade. And so you need a bridge for that. You need some sort of bridge infrastructure. And we've seen a lot of subscribers on the M-Bridge, which is one of the most popular, across Asia, and we have countries such as the UAE plugged in as well. So we'll see a lot of that kind of collaboration to try and sort of dissociate. We've also seen sanctioned countries, Russia as an example. So to the extent that these are now pushed to create their own payment trails, and CBDCs, I think, will be a possibility. The other repercussion is the fragmented nature of the progress that was so far attained and the competitiveness around different countries and regions moving quickly to create their own CBDCs. So I think that's the downside to this as well, to the extent that different countries are very aggressive in pushing their own CBDC, and what that means to creating bridges across different markets to allow cross-border trade, I think is one of the things that I see as a key bottleneck. And then obviously this will increase the popularity of USD-backed digital currencies that are decentralized in nature, such as USDC by Circle, that is fully regulated, and USDT by Tether, whose regulation is very questionable among most popular sentiments. But I think they're already in a very good place to say, look, we already have very popular USD-backed stablecoins to the extent that we put a pause of this and sort of focus on the sovereignty of the nation, the privacy of our citizens, and our financial sector stability as a market is interesting. So I think those are the key repercussions, and I think one of the areas of interest to us as Africa is definitely the growth of USDC, USDT is a no-brainer. And we've seen a lot of this privately in the private sector. We have a number of importers leveraging stablecoins to import goods out of China. And even within the continent, cross-border, a lot of the young, fastest growing startups in Africa are leveraging stablecoin payment trails. So I think the fact that Western capital, primarily center focus being the US, driving the adoption of stablecoins into emerging markets, such as parts of Asia and Africa, to leverage stablecoins backed by the USD, I think will be very interesting to watch. So those are the few geopolitical plays that I see resulting from this ban. But it is real, and the second element within the executive order is creating a strategic reserve for digital assets for the US. And we saw that announcement over the weekend, three virtual assets, and obviously Bitcoin being one of them. And they're saying, look, as a nation, we're looking to have this as strategic reserve. So I think this is the prick to this whole changing world order that I perceive. But it's very early days, very difficult to sort of predict. In the African context, I think it doesn't stop us as a continent, as a country, from exploring CBDCs. But whilst doing so, creating an avenue for private sector practitioners in the stablecoin ecosystem to thrive. So some sort of concurrent approach, hybrid approach, for lack of a better word, where we continue with the CBDC approach from a central bank perspective, but also leverage the existing regulation and infrastructure within the NPS Act to allow players explore stablecoins that are already recognized, such as USDC, which is one of the most highly regulated, to say, how does this look? Because on one hand, the challenges we'll face in the future from a wholesale or retail CBDC is cross-border trade, depending on who our trade partners are and how fast they move onto this kind of infrastructure. So to the extent that we have discussions to smooth out any regulatory bottlenecks between two different economies, two different central banks running different approaches to CBDCs, I think that can be smoothed out by still allowing growth in the stablecoin ecosystem to allow cross-border trade. And obviously, there are discussions around the convergence of an East Africa community currency. I didn't hear that anywhere in the comments. Would be interesting to know. But what does that really mean for the bloc within East Africa? So those are my 2 cents. Thank you.
Thank you very much. Yes, Rashmi?
I'm going to be at the risk of embarrassment because I will expose my naivete. When you asked about Trump, my immediate gut reaction to that was what it has taught all of us is we don't know who's ever going to be in power in the future, right? We all believed that there's always going to be, as Anita said, there are laws and there's going to be checks and balances. Checks and balances went out the window once we had somebody, like the US had somebody like Trump in power. So I know this sounds ridiculous, but in my mind, when you talk about retail CBDCs or CBDC infrastructure, that's a one-time investment. You make the CBDC infrastructure investment, etc. In now where we're faced with a reality where we don't know, where you have constitutional crises, where executives in power disregard laws and regulations, is it going to be easy at a press of a button to print money? Because there's no actual friction of printing paper. Like, you don't need to print money anymore. It is all digital. Like, how do maybe I'm being very naive, But that's something that I worry, and hopefully the BOU will tell me that it's never going to happen. So.
Great. I think that's a good take on checks and balances. I think I don't know if the BOU will want to respond to that. So I don't know how much time do we have from our MC before. Yes? We could take one last round. Great. So I think the last question I want to ask, and this is across all of you panelists, is what next? I think the presentation we had, that this report is now out, they're going to receive comments, and then I think there's going to be subsequent consultations. But how best can the Bank of Uganda prepare itself? And here I'm thinking about, we've already been assured that the legal framework is okay, nothing needs to change on that. There was, as I think in the report, piloting this in a sandbox. There's going to be a lot of stakeholder collaboration. We expect to see private and public sector. How is government involved in this? We also expect to see a lot of financial literacy, digital literacy, but also awareness of what the implications of this deployment would be. So there's a lot of preparation that has to be in place before any real work can start. So in your opinion, what would be the roadmap? When we leave this room, what should be the next steps? And I'll start with Paul all the way.
If the man on the street was to give a roadmap, probably it would be a bit more. Oh, sorry. Although no more he, she, them, they, whatever. But anyway. I think there's a small story of a Japanese official in I think it's the Ministry of International Trade and Industrialization in Japan, and he was asked, I think in the early 2000s, they was asked, what has been the impact of the French Revolution on world history? And the Japanese official thought a bit, and the French Revolution happened around 1789, so that's about 235 years ago. The Japanese official thought a bit and said, "It's too soon to tell." That's their way of planning. They think so many years ahead, and I'm just thinking, just sitting here listening to all this, having seen, for example, the way the explosion in mobile money has happened, and the way we've transitioned in Uganda alone. I mean, the governor just spoke about transactions last year in 2024 about 253 trillion, which is more than the GDP of Uganda, which is about 175 trillion. For me, is an amazing figure. It's been replicated by Safaricom in Kenya. But CBDC, is it an attempt for the central banks to retain a control that is going away? And in doing so, it seems to me as if they're acting out of fear. If you act out of fear, the things that you come up with might not be the best thing. So maybe it's something for us to think about. I'm thinking maybe 200 years down the line. Maybe in this planning, we need to think of that we are working ourselves. Okay, not we. The central bank is working itself out of a job. And at some point in future, are we preparing for that kind of eventuality? Not probably in Michael Atingi-Ego's time, but 100 or 200 years down the road. It might improve our processes in planning this CBDC.
Jackie, I mentioned that, yes, we have very good laws, right? But you also have to know that there's no country in the world that has 100%, is 100% satisfied with all the laws they have. So it definitely can never happen. But also you can't wake up every single day you're regulating on every small little thing. So that's why I was saying that where we are at now in the regulatory space, I'll say that I'm very comfortable that definitely we are good to go. In case of any specific issue that or concern that would need to be addressed, it can be implemented through regulations, because usually when you have the main laws or they call them main statutes, you can have regulations or policies. Usually the central bank has so many, policies that they issue here and there to guide on a certain issue or specific issue. So that would be my opinion and take that definitely where we're at, we could go. But what I would think that we could do in regards to preparing ourselves as a country would be for the Bank of Uganda to carry out some kind of public awareness so that Ugandans or the public or the average woman or man has an idea of pretty much what is coming. There's nothing as bad as, launching something and everyone is like very scared and wondering what exactly is going to happen. If you share this information in bits, through different campaigns, and I think the central bank has done that previously with other, sectors, spaces, in other spaces. So this definitely also should be, should come easy. Public awareness, and also, of course, in my area, there should be a lot of training, definitely, because I'm on the side of law enforcement. Yes, you have the regulations, but how do you enforce them, right? Enforcement is extremely important because that's also one of the things that actually we lack a lot in most of our regulations. So training if it means, of course, if it's like cyber crime, it could be the police, the judges, of course, the lawyers themselves. And I feel all these trainings actually in these kind of spaces are ongoing and have been going on for some time, but I feel that would be also one way that we could definitely get more ready, in specific regard to the CBDC project. Thank you.
Thanks, Jackie. So despite everything that I've said, I'm generally a very positive person. And I normally have a positive outlook to things. I actually believe CBDCs can be impactful. I truly believe wholesale CBDCs will start paving the way. We will try. It will teach us a lot of things that we don't know, right? We don't know what we don't know at this point in time. And I think that would be a first step to a good transition to understanding it better. The second is, one of the things that we do know is the design of retail CBDCs, the design components and their functionalities are super, super critical. So we cannot do it without co-opting the intermediaries. So that would be commercial banks and wallet holders. So it's not going to be possible without that, because we don't understand fully yet the financial stability risks that it can bring and at what costs. I also... so I think there is merits. I also think that key questions that we should answer is, what are we trying to solve for when we talk about retail CBDCs? What is exactly the problem? Why is it that existing instruments cannot solve for that problem, or new investments, etc., cannot solve for that problem? And then there will be, and is this the right time? There is going to be a time for retail CBDCs. Is this the right time? And and that will speak to the evolution of the market. So those are my concluding remarks.
I think for me, two key things. The first approach to rolling out CBDCs makes a lot of sense, but behind that is a key fast approach to wholesale CBDCs. And to the extent that we do that well, because when you get to the retail side of things, the cybersecurity risks we have on the wholesale CBD side only get exponentially greater when you come to the retail CBDC side. And so there are issues to solve for around cybersecurity. And so to the extent that we focus a lot more on a wholesale CBDC in a closed environment pilot, I think would be interesting. I think the second thing is privacy by design from the get-go, because a lot of the reasons why most people are very skeptical when it comes to CBDCs and why Trump had the ban, one of the reasons was privacy. So to the extent that we sort of have a mandate to design something that puts privacy at the center stage from the onset, and that well articulated and communicated to people will be very interesting. And there are ways to do it, zero knowledge techniques, ensuring that all transactions that are validated do not expose who the players are, to the public. It sort of keeps the sovereignty of the individual transactions, whether it's at a wholesale level or at a retail level. So I think those are the two key things that would be interesting for the central bank to consider. Thank you.
To open it up to the floor, and I'll ask the MC if we have questions. We could have questions in the room, but also questions online. So our panel is here to support.
Let's
the Q&A.
appreciate the panel for these thought-provoking discussions. I will start with comments from the online participants. We have about 140 people following this discussion this morning. And the first person is asking about the impact of CBDC on mobile money vis-a-vis employment, cybersecurity, and infrastructure, especially in the rural areas. Okay. The next one is sort of related. They want to know the difference between a CBDC and cryptocurrencies. So those are the two that I've picked from the audience. And maybe we could start with those. Do we have any? See the doctor there.
First of all, thank you as a panel. And mine is more of a comment followed with a small element of a question. Allow me to start by saying that the road to hell is paved with good intentions. And that central bankers, by definition, we're the kind of people at the party who, once everything is getting heated up, will grab the punch bowl and run away and stand in the corner and scold at everyone who wants to take more, because they're introducing a risk to themselves. My colleague from the Blockchain Association talked about, allowing or perhaps considering stable coins. I think there's a move, and I would like perhaps anyone on the panel to consider this, is that if as a central bank, we are to allow, or to begin to consider allowing stable coins, especially those backed by the US dollar or the euro, it introduces dollarization or euroization, if there's such a word, through the back door, okay? The question then becomes, do you then end up having a contention between stable coins and CBDCs? Because if a person at a retail or a banking institution is to choose whether to hold some of their assets in central bank issued digital currency by the Bank of Uganda versus a stable coin backed by the dollar, I think everyone in this room knows where the answer would be. So then, while it seems like a good idea, the question is it something that's for us? Paul Bishop has talked about 235 years. Maybe it might not be. Because in the other again, because that introduces questions about national security, sovereignty. So that is my comment. The next question is, and for anyone on the panel, is in talking about CBDCs, and I think this is something also Rashmi raised, are we providing a solution that's going to look for a problem to solve, or are we solving a particular problem? And if the latter is the case, what is the particular problem that we're solving? Thank you.
Over to the panel.
So I think Rashmi can answer the question on mobile money, and then Reginald, I think you can, the difference between CBDC and cryptocurrencies, and then Dr. Tirunamanzi's question. I think the question on which problem are we solving should be answered by the Bank of Uganda. In my view, I think that should be answered by the Bank of Uganda. Thank you.
To whoever online raised the question on what is the impact on mobile money, I think even Reginald and multiple panelists spoke about it, so I will try summarize what they say, that there are certain aspects of the retail CBDC that need to be understood. Number one, who's going to distribute that CBDC? What does it mean for existing e-money issuers than the fiat currency that is in existence? How does that differ? The Bank of Uganda is like, the way they're thinking of it is it's 1:1, they're interchangeable. But you still will be riding on, individuals should be able to hold CBDCs as well as fiat e-money, which is your mobile money, and that can be as a sub-wallet or a separate wallet. Will that wallet be with existing wallet providers and banks, or will it be a separate wallet issued by the Bank of Uganda? That's for the central bank to decide, but they don't have a distribution network like agent network, so they have to rely on the distribution network of banks or mobile money operators, which means we will charge them for issuing the CBDC, because that's not happening for free. The agents will still be in business in that case. If not, we are going to have a problem. You then had, sorry, did I answer that question?
There's something on employment, cybersecurity, and infrastructure in rural areas.
I think that no central bank is going to have its own proprietary infrastructure. That's not the job. Like in terms of like human infrastructure, I'm not talking about capex. So they will rely on private sector providers for that. And if the attribute that the central bank is trying to solve, that, oh, it will be affordable, that's where my question is, how is it going to be affordable? We've not formalized enough as an economy. We're still relying on agents. And most of these agents are doing over-the-counter transactions, which should tell you a lot about the literacy of the customers that are using what we are saying, oh, mobile money is heavily adopted. Yes, but they're not using it from their own phones. They're still doing a lot of over-the-counter agent-assisted transactions, right? So you're relying on private sector infrastructure.
I think that's well answered. Any other?
Difference between CBDC and cryptocurrencies?
Yes.
Thank you. Maybe just to buttress on just one point to deal with cybersecurity in the previous question. I think the nuances around cybersecurity and digital currencies are not exactly unique to it alone. It's not that CBDCs will introduce a completely new set of cybersecurity risks, whereas that's the point. Whereas that could be true, there's a flow-through around the already existing cybersecurity threats as we know them by virtue of having a handset or being on the internet. So I think over 80% of these threats are to deal with human error, phishing and all these things. So mass awareness, like you said earlier, I think would be interesting to look at, but it is indeed a very key risk. US stablecoins CBDCs versus cryptocurrencies. I think the best way to provide guidance on the difference is intranet versus internet. So before the internet became very popular, you had big companies, the IBMs and all these huge companies with their own internets, what we used to call intranets. So they would innovate their own infrastructure that wasn't necessarily out there or public in nature. And obviously, as different companies continue to innovate different intranets, it became very feasible for us to evolve into an internet. So CBDC is issued by a central authority, in this case the central bank, with infrastructure that is highly centralized because of the nature and the mandate of the central bank. And on the other hand, a lot of these cryptocurrencies are decentralized in nature and are created on public ledgers. And these public ledgers are different. You have hundreds of different public ledgers. And so that also poses a whole set of risks. But the key difference is that this is centralized and the other is decentralized. So intranet versus internet. Just to touch on Doctor's points in regards to the value of stablecoins, I'm a very patriotic person, but the realities of the world we live in is it's become a very globalized economy. So we live in a global village. And I think I raised this in the context of cross-border trade, not in the context of creating competing currencies, for lack of a better word. To the extent that even in today's world, even with the traditional infrastructures we have it, we still do a lot of cross-border trade using the USD, among many other currencies. So I think the point around allowing innovation in this space is to leverage the existing regulatory environment. For instance, SACO, which issues USDC, recognized by the US and fully regulated under its laws, could be one of the ways to look at it. And in Africa, in the context of Africa, we have, I think, over 37 currencies. And the AFCTA, the Africa Continental Trade Area, continues to boast of intra-Africa trade. And so, but with over 30 currencies, it's a very fragmented environment. And so the unifying factor, assuming not everyone moves as fast as we hope they should move, as far as CBDCs are concerned, because I talked of issues around the bridge between different currencies from a CBDC perspective, like the M-bridge that we've seen different Asian markets subscribe to. So in light of those realities of the fragmented nature of Africa from a context of its currencies, and the fact that the USD continues to dominate global trade in terms of a currency of choice, I think then it makes sense to then allow for some sort of innovation and clarity on regulation for practitioners in the stablecoin space, particularly those that are already regulated by global standards. So I think for me it was in the context of cross-border trade. Yeah. Thank
you. Forgive me for hogging the microphone, but just for your benefit, and so something I think Rashmi also mentioned, the issue then would be whether stable coins are better for cross-border trade or cross-border payments versus having countries have national switches and then interconnecting them. Because that is a much simpler solution, and having, like you talked about the stable coin, which is regulated by the US government, increasingly we see that access to SWIFT and the dollar has become weaponized and a tool of diplomacy, okay? So from a national, and I say this, from a national security and sovereignty point of view, to the extent you can, you would like to have as many of your transactions not dependent on another entity making decisions for you. So, and which goes back to the question I asked, what are we trying to solve? Do we have a solution for a problem we are looking for, or do we have a problem and for which we have a solution, or we're looking for a solution? So I think on the discussion about stable coins, I think the better approach I think would have been, or should be, that increasingly for intra-Africa trade, if as many countries had switches, national payment switches, and then there was interconnectivity between those switches, then would have a means of exchanging value that is not dependent on any other currency outside of the two trading partners. Because if a transaction between a Ugandan businessman and a Kenyan businessman has to go through dollars, that means there's a third party being a part of the transaction, and yet they're not party to the exchange of value. Now, just also to give you comfort, there have been a number of initiatives. There is the South African payment system, there is the regional payment system under COMESA, and now there is Pan-African payment, Pan-African payment system. Okay, so that's where the PAPS I think is meant to be a hub and spoke, where different countries that have switches plug in, and then automatically they can exchange value with those outside. Of course, there are a number of issues that would have to be dealt with. But my concern then is that CBDCs would not necessarily have to appear there. Yeah. Using Paul's example, is that they would start first with the connection of switches, and down the road, maybe move to digitizing or CBDCs for those, or tokenizing those transactions.
Yeah.
Thank you.
So very good points, because to the extent that, and like I mentioned earlier in my submission, there's a high risk of fragmentation between different countries, either within the African context, as an example. So as you roll out the CBDC mandates, it's interesting to also, at a macro level, the initiatives you've mentioned, to see how do those trickle down into the realities of what we're trying to roll out in the country. Because it remains an interesting bottleneck, and also now looking at Africa versus other continents. So Africa versus China as one of our key trading partners, what would that mean? To the extent that, so it's a very delicate discussion, but to your point, I think the end goal should be to maintain the sovereignty of African states, and obviously merging those macro discussions at a regional level with the different country initiatives, and also from an infrastructure perspective, cybersecurity, how is it to be to connect with each other. In an ideal world, that would be the right thing to do. But while we sort of path way forward, it's interesting to sort of consider these already existing. Yeah.
Rita, are panelists allowed to ask questions to the BOU, or is that against?
Yes, it's an open discussion now.
So, Dr.
Although there was something needed clarity on.
There was a pending response from Bank of Uganda.
Thank you. The question I would like to respond to was on Dr. Twine, I think, put it in analogy of a solution looking for a problem. But if we go back to the consultation paper, the theory, and I will start with that, literature that has been published on CBDC suggests a number of potential benefits. First is the financial inclusion story, through which, if it is a retail CBDC, you'll have a universally available alternative to cash, which can be the basis for adoption of digital payments and, of course, extend access to financial services. But that is, of course, conditioned to a retail CBDC. Literature speaks to things like monetary policy efficiency, depending on, again, the design choices that you make. If it is an account-based CBDC, and then you also deal with questions around whether it's remunerated or not, the questions around interest-bearing or not, then you could enhance monetary policy efficiency by directly impacting money supply. But that is if it's account-based. If it's token-based, then it is a whole different story in terms of monetary policy efficiency. The issues around efficiency in settlement, today, settlement is in commercial bank money, even for mobile money. While the beneficiary will get credit into their wallet, the credit risk remains, because at the end of the day, it's dependent on the trust account and whether that trust account is funded, which is sitting in a commercial bank. So settlement is in commercial bank money. CBDC changes that entirely, because settlement is in central bank money. So it completely eliminates that element of credit risk. So there are issues around potential innovation in the payment space, the cross-border. Dr. Twine has been raising the sovereignty argument. In the literature, central bank sovereignty, and I think this speaks to the 200-year story, with all these emerging alternatives, the crypto, stable coins, central bank sovereignty cannot be ignored in this conversation. So to a certain extent, in some jurisdiction, central bank sovereignty has been a motivation for CBDC. However, I would also like to close by emphasizing that at this point in time, we have not decided to go ahead with the CBDC. I think that needs to come out very clearly. And the question of what this means for Uganda is what we're trying to address, even today. You see, and the panelists have unpacked some of these things. The question we're trying to address today is, does it make sense for Uganda? And we've shared with you the results of the survey. The survey indicates that the public thinks it could support financial inclusion. It could deal with some of the pains we have. One of the pains we have with mobile money, which is so successful, is transaction charges. The EMIs are not here. But we have issues with transaction charges. So would CBDC as a free alternative address that? Would that mean we can get more people into the formal financial space? Those are the questions that we want answers for. Monetary policy, depending on the design choices. Currently, we have challenges with monetary policy efficiency. We have a lag. Our financial stability experts usually say maybe 2 to 3 months lag, sometimes longer. So are those things that would be addressed if you had an account-based CBDC? Would you impact money supply more quickly? So those are the conversations, and we've shared with you the results of the survey. So the jury is out. And depending on what will happen in the next phase, which maybe I can also comment on right now, we intend to have a detailed feasibility study a detailed and empirical study, which will guide the next step. So at this point in time, we also don't have some of these answers. What we are sharing is what came out of the consultation. But that will have to be subjected to a comprehensive feasibility study, which will refine, the design choices, or whether even it makes sense, cost-benefit analysis, and then that will guide whatever happens next. So I thought I need to provide that clarification. Yeah, thank you.
Thank you. I saw some questions at the back. Rashmi, you wanted to ask a question or? Okay, great.
Yes, my name is Irene Sisi. I can call myself a freelancer crypto holder or digital currency holder. And I'm just appealing to the Bank of Uganda. I'm responding to the lady who was talking about digital awareness. And appealing to the Bank of Uganda, I think to just come out and swallow the words, all the warnings that were made in 2017 around there regarding digital currencies and cryptocurrencies, because it was warning the public against this. And I just want to inform the lady there that on the ground, people are much aware about these digital monies, and we are using them. People are using digital currencies and on a daily basis. So it shouldn't be a worry that people are not aware. People are carrying out transactions every day. I'm having breakfast, lunch at a certain restaurant there along Lumumba Road using my one coins. And there are other currencies like yen, where we are even using, last night we bought buildings using our real estate coins. So the other issue of KYC, know your customer, is not an issue. People are already registering. I know many people, millions of people, who are having digital currencies. And to have a digital currency, you are supposed to have a wallet, which wallet is supposed to be verified. And to verify that account, you should have uploaded your KYC documents. That is the IDs or passports or whatever. The other issue would be, I would address is, for the Bank of Uganda to engage these freelancer crypto holders into the system of sensitizing the public. Because we know what is happening on the ground, and we know how to handle these people. And the people are fed up of poverty. When they hear of this money, digital money that is going to make them rich, they just come out rushing. So please, don't be scared of this KYC document or whatever. No, people are going to come out. And I think it's the only people in this corporate world that are fearing these cryptocurrencies or digital monies. For us, we are already there using them. I bought an apartment in Zanzibar yesterday. Yes, I bought it with my digital currency called the real estate coin. It's under YEM, your everyday money. We have action coins, we have Pi, people are mining Pi on phones. So the other thing I would advise, I think, is the Bank of Uganda to come out with some tokens to be given out to the public for free. That's how they are going to bring this public on board to entice them as in. Yeah.
Thank you. We are running out of time. The discussion is getting heated. Just two last ones. We need to close. The chairman of FITSPA.
Thank you. Really appreciation to the Central Bank for organizing this, and particularly for involving the media, because this is a critical stage where, equipped and tech-savvy media can be very helpful. I think the question that Dr. Titi raised about the problem we are solving should ideally be the central focus of this workshop. Because we are at the design stage, and that problem should be in the context of the customer. And I just want to attempt to answer, give some two highlights. Perhaps the problem is that the cost of printing and maintaining currency is very high. So that is a problem. If that is solved, what does it mean for the customer? That's what we should be discussing. Do they actually have benefits in terms of interest in sustaining a CBDC account balance? That is something that we can discuss. Perhaps another problem is that the nature of the African market is highly fragmented. And the CBDCs could perhaps, through collaboration, structured collaborations with central banks, could facilitate the conversation that we are just having, cross-border payments. But that cannot be a standalone, because as you can see, you cannot talk about efficient, multiple cross-border payments if you're not talking about addressing trade barriers that limit these multiplication of these transactions. So in my view, I think that the CBDCs could be approached through a use case rather than a separate currency. Because in my understanding is that the CBDC should come out as a form of currency and not a currency, a separate currency on its own. In that case then, you allow it to transition to another form when you have a use case that warrants that, like cross-border. But you do that after having also addressed the inhibitors of the cross-border payments like trade barriers that exist. For example, I would take the approach of the East African market. We've been talking about free trade area. So maybe we have a currency that can actually work for the East African market. So then you know that there is a benefit. When you transit to a CBDC, which is actually also applicable to other jurisdictions, you're not going to lose value through the transfer. But I would disagree with the idea of having stable coins within the same country. I think the national switch should suffice.
Thank you. One last question and we wrap up.
My name is Godfrey Joga Sevukulu. I'm into the digital channels, mainly the channel side. And I was wondering, listening in and say, did Bank of Uganda invite us to listen to their internal discussion or to take views from us? And listening to Dr. Titi, I sincerely concur 100% with his submissions. But I think Bank of Uganda should find more time to engage in internal discussion and building consensus among yourselves on these matters. I'll give you an example. My granddaughter came the other day, and she had a cannula on her hand. And I asked, what's the problem? I came in from school because I collapsed twice. And says, now, what is the doctor treating? He says, I don't know. But she had taken about, they had put some water, okay? They had antibiotics, and then antivirals. And then, so as a judge, I told the daughter to take water. I bought a mineral water. I asked her, do you take water? I said, now I take a cup of porridge. Once a day. So I bought her a bottle of mineral water and told her to drink 3 liters of water each day. And precisely this is the problem with Bank of Uganda. It's the cannula problem, and you are responding to a basic fundamental channels problem, okay, with a new currency issuance. Okay, the reason M-Pesa conquered, the reason mobile money has conquered, because it's a channel that is so versatile and responding to people's needs. It's not because it's a currency. M-Pesa, people know the Kenya shilling is behind it. Mobile money, Uganda, people know there's a Ugandan shilling behind it, and the central bank and everybody stands behind it. So you come in with a new currency to respond to a channel problem. I agree with Dr. Titi's submission that, start with a switch, okay? And then accept cloud systems. We can't enter banks because they've rejected cloud system. And you know how expensive it is to in-house systems for everybody. You're having wallets, everyone has a wallet. And that's a fundamental failure in the industry. Why should everyone have a wallet? And you know how costly to have the back end to support every wallet. You know how many wallets are struggling in this market and how many you license, and they are failing in the next 6 months. You should encourage interoperability, and you should be receptive to disruptions, because in this industry you must have people failing. Okay, there's no reason I can't enter a Centenary Bank and be able to transact as maybe an equity customer within Centenary Bank. The only big loser here is going to be the central bank as you as you drown and trying to catch on every piece, but doing it wrongly. And I go to that submission, though I think it's the wrong forum, but you go and have these internal discussions. Start with a switch. And when you go in, don't dive in to create a tsunami. Just slide in slowly with your switch, and then feel like how the pieces are getting together, and then you can go deeper into these implementations. Otherwise, you are going to become a very endangered species in all this, because I think you are diving in, but the waters are so disturbed. You've heard the lady submitting that you now don't control. There are things you don't know going there, and they're happening at a very fast rate. You need the Trumps to disrupt. But in all this, when things are disrupted, people are going to be kicked ashore. People are going to, you know what the tsunami did. But in every situation, there are going to be survivors, and there are going to be culprits. My fear is that the banking industry is going to be the biggest culprit in all this. So I think, sorry, I took some time, but to the extent that the new currency is going to be reserve-based, controlled, and issued the same way you issued the manual currency, then there's nothing new. Thank you.
Okay, thank you.
If I may, thank you for your submission, but if I may, let me just clarify. Today's session is, we are looking at the findings of a survey. And the main reason for Bank of Uganda is we want to understand and get clarification in terms of what was submitted in that survey. The findings were presented, and we just need clarification. We just want to understand what exactly you are thinking for those who submitted their thoughts in the survey, what they were thinking, and if our understanding is the same. That's one. Two, like my colleague Andrew here has indicated, we are not issuing a currency, and I'm very specific about this. We are not issuing a new currency. We are just saying there is this form of currency that exists. We are trying to understand, is it even worthwhile for us to look into? Because it would be remiss of us, it would be equivalent of Bank of Uganda putting its head in the sand if we refuse to acknowledge that CBDCs exist. And I think we owe it to the Ugandan people to whom we are accountable, that if there's a new development in the market, we should evaluate it and determine whether or not it fits the market. Okay? So, for clarity, we are not issuing a new currency. We are trying to understand this new thing of CBDCs. Is it something we should even be looking at? Okay? That's the clarity. And to the lady who said that bought an apartment, thank you, congratulations. Good for you. Bank of Uganda's position on cryptocurrencies has always been the same. Our point is, you are free to do with them as you wish. Because I think one of the speakers mentioned, it has no jurisdiction. We're just saying that you won't have the same protections when you use them as you would if you were using a currency issued by Bank of Uganda. So you do so at your own risk. If you choose to risk and you make money, by all means, that's the whole purpose of money anyway, the higher the risk, the higher the reward. Fantastic for you. But the reason why first of all, it was issued by the Ministry of Finance in October 2017, and subsequently Bank of Uganda made a statement in 2019. Dealing or engaging or participating in cryptocurrencies is entirely at your own risk. In other words, should you lose or have problems, don't come to us crying. So if the apartment turns out to be Ichiwani, they sold you a stall at the cost, you can't come to us. That's what we're saying. Thank you.
I just want to add to Dr. Titi's point in relation to the lady's comment. I think most people don't realize how forward-thinking the Central Bank of Uganda is. There is efforts within the Central Bank of Uganda to explore the applications of blockchain technology in the entire payments ecosystem. So exactly what you just said, they are looking at it, and it's an area where the association has closely worked with the central bank as well as other players such as FITSPA. And so the comments are real, it's at your own risk, but that notwithstanding, the central bank has created an avenue where they're trying to look at it and cross-collaborating with other players such as the CMA, the FIA, and other stakeholders. So there is some effort, and that's how innovative the central bank is. And that's to my first point when I started speaking, that we're very privileged to have a very forward-thinking central bank. So contrary to what you may hear in the media, these people are very serious and very innovative and forward-thinking. But at the end of the day, they owe it to the public to protect your interests, to protect your money. You've done well, but it doesn't mean everyone has had a good story around all these scams and things that are outside what we see as the right approach. So I just thought I would make that comment to my colleague in the marketplace.
Thank you very much, our audience. And again, please join me in thanking our panel for a great discussion. I think so many things to chew upon: wholesale versus retail, phased approach, disintermediation, CBDC as a use case. I think everyone has emphasized the need of awareness, role of collaboration, and encouraging interoperability. I will hand back the mic to the MC. Thank you very much.
Thank you, Jackie. Thank you, panel. Great discussion. At this point, I'd like to call the Director, National Payment Systems Department, to give us his last remarks and wrap up. Oh, and also to inform you that we have QR codes on your tables. Please fill in that evaluation. For those online, we're going to post it to give us your feedback. Any questions, kindly post them or send them to the FinTech office at Bank of Uganda, which is FinTech office, one word, at bou.or.ug. We'll be able to compile all these questions and get back to you through our different platforms. Thank you.
Thank you very much, MC. Our chief guest, Governor Michael, our panelists, the moderator, and distinguished ladies and gentlemen in your different capacities. First, I would like to thank you all for gracing this event. Thank you very much for the conversations we've had. This is a critical step in the Bank of Uganda's innovation agenda. I need to be very clear on this, that we're not just diving into things. Innovation is part of, is a key pillar. Innovation is a key pillar in the financial sector e-payment strategy that we've been implementing for the past 3 or 4 years. And so the conversation we're having is clearly part of the central bank's strategic priorities. And therefore, your input is critical, your input is highly valued, particularly with regard to our vision around payments, which is to empower Ugandans with a broad range of innovative e-payment options that are safe, efficient, accessible, convenient, and inclusive. So a number of things have been raised around infrastructure, legal and regulatory frameworks, cyber security, operational risk, and all sorts of concerns around consumer protection. These are indeed the pillars that are provided for in the e-payment strategy. And there are lots of ongoing initiatives. The national switch has been mentioned. There is a lot of work going on around there. The legal and regulatory framework, even beyond what we've discussed today. Currently, for example, we're reviewing the National Payment Systems Regulatory Framework, and some of you have already shared your input. This particular conversation might require some work around the legal framework about the central bank's mandate on currency issuance. So we hear you loud and clear, and I'm very happy having been part of the conversation today, because this is the kind of feedback that we were soliciting for. Stakeholder collaboration has also been emphasized, and that is why we are here. We do know and fully understand that innovation cannot be a central bank-led mandate. We must work with you, the practitioners. We must work with the private sector, and indeed, that's the direction we are taking. So where do we go from here? We're going to, of course, refine the stakeholder consultation report based on the conversations we've had today. And that report will be published after clearance by the central bank's leadership. And then after that, we expect to go into a detailed feasibility study. And this is a point I emphasized earlier on, to mention that we've not taken a decision on central bank digital currency. There are lots of considerations, like you've rightly heard. How do you design it? Should it be wholesale? Should it be retail? Is there even a case for it anyway? So those are issues that are going to be subjected to a detailed feasibility study. And in the event that the feasibility study says there is something to benefit from, then again, we shall come back to the public and consider a pilot study. But that is subject to the findings that will come out of that study. And then lastly, I would also like to emphasize again that this is a collaborative approach, and we believe that even during that feasibility study, there will be a lot more public engagement. So we encourage you to participate in these conversations when the time comes, so that we have a holistic assessment of our ecosystem. Otherwise, I would like to thank you very much once again. Thank you for the feedback. Continue sending through the feedback for the online community. fintechoffice@bou.or.ug will be ready to receive more comments, more questions, and we'll be happy to address them. Thank you very much, ladies and gentlemen, and we look forward to a continued collaborative approach as we explore innovations in the digital financial services, even beyond just what we've discussed today. Because like I emphasized, there are several other ongoing initiatives. Lastly, let me also use this opportunity to mention that we are soon commencing an evaluation of the e-payment strategy with our partners, FSD Uganda. And for the stakeholders out there, please accept to join those conversations. We shall reach out to you in due course so that we evaluate that strategy and lay grounds for the next e-payment strategy. Otherwise, thank you once again. And I think, MC, I don't know that you have anything else to say. Otherwise, we close the event. Thank you very much, and let's keep the conversation going electronically.
Thank you. Dear participants, kindly register so that we can put you in our database for future engagements.